Welcome to Mastering Your Financial Life, hosted by Judy Heft, the founder and CEO of Judy Heft and Associates Financial and Lifestyle Concierge. This year, they're celebrating 26 years in business. In every episode, Judy interviews professionals who help others successfully manage their financial lives. You can find this show on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, Stitcher, and more. Judy is the author of 2 books, How to Be Smart, Successful, and Organized with Your Money for a Better Today and Tomorrow, and her latest book, Mastering Your Financial Life Cycles, How to Successfully Manage Money in Every Decade of Life. You can read chapters of her books and catch prior episodes of this show at www.judithheft.com. Now here's the host of Mastering Your Financial Life, Judy Heft.
Hey, hello everybody. Welcome to Judith Heft and Associates. This is Mastering Your Financial Life, and today it's our 37th episode, and I'm thrilled to announce our guest is Mark Campbell. Mark Campbell is the managing director at Scout Valuations. They specialize in all kinds of business valuations, not evaluations. I have a tendency to say that when I'm saying valuations.
Lots of people do.
But anyway, they specialize in all different types, including but not limited to divorce, estate planning, mergers and acquisitions. Mark is a great guy to know. He's really well versed in the financial world. He's a former CPA, and he really gets it. And he's, a great advocate and ally to have. So thank you, Mark. I'm really happy to have you here today.
I'm happy to be here.
Yeah. So, I just wanted to, I have a couple of questions I wanted to ask you. Why would someone need a business valuation, or especially in a divorce situation or estate planning situation? I understand why they need it, maybe if they're going to sell their business, those types of things. But what are some of the other reasons?
Yeah. So my work falls into 3 main buckets. One is, as you said, for IRS valuations. Mm-hmm. So if an owner is transferring interest in their business for estate planning or tax minimization purposes, those have to get valued. Or if someone dies owning a business and a business interest, those all have to get valued for tax compliance purposes. So someone has to file a tax return, either a gift tax return or an estate tax return, and they have to report a value on that tax return. So my valuation informs them of what to report on that tax return, and actually gets attached to most of the tax returns as well to support that.
So how do you calculate it? Oh, I'm sorry. Go ahead.
No, that's fine. Go ahead.
No, I was wondering, how do you calculate what the business value is?
So there's 3 main approaches to valuing a business. There's an income approach, a market approach, and an asset approach. So we try and look at all of those and decide which ones make the most sense for any particular purpose. So an income approach basically looks at the cash flows that a business is generating, and our work really is around normalizing those cash flows. So we look at things are maybe non-recurring or one-time events, and we might add those cash flows back to the business, or we might look at things that are specific to the business owner. If their compensation isn't really in line with markets, or if they're paying rent to a related entity, we'll look at those cash flows and try and normalize it to a fair rate, a fair market rate. So we look at the cash flows and then basically the risks of the business associated with generating those cash flows in the future. So, the value of a business is the cash flows it can generate in the future, not what it's done in the past. So we look at cash flows and decide how risky are those cash flows going forward. Are there things like customer concentrations or key man issues? Someone like you're a key person to the business. So we'll look at things that make those cash flows more or less risky, and that risk is captured in what's called the discount rate. So that's an income approach, and then we also look at what's called a market approach. So a market approach looks at transactions that have actually occurred in that industry, in a particular industry, and for a particular size company. There's several databases that we go to that capture those transactions, and then we come up with a multiple based on those historical transactions that have occurred and apply it to the business that we're valuing. So that's a market approach. We can also look at guideline public companies. There's lots of information on guideline public companies. So we'll look at those as well. Sometimes guideline public company information is hard to correlate to a smaller privately held company, but we'll still look at those as well. So that's a market approach, looking at market information. And then the last is an asset approach. That's typically used not necessarily for an operating company, but for companies that are asset intensive, or if they're real estate holding companies or asset holding companies, we'll look at the assets of the entity and mark those to fair market value to come up with a value. So we'll look at those three approaches to come up with value, and then come up with a report that gets attached to a tax return for the IRS.
That's pretty interesting way to do it. You really have to delve deep and, get all those numbers correct and get them all together. So how does being a CPA help you get into, figure all of this out? Is it all intertwined?
It is, yeah. So a lot of times we're looking at financial statements of the company to come up with cash flows, or we're looking at the tax returns of the company, and we have to understand how those tax returns, what are related just to tax and are not necessarily actual cash flows of the business. So what adjustments do we have to make for those? So it definitely helps understanding accounting to come up with appropriate cash flows. Yes.
Yeah, because there's so much to know and understand. So what are some examples of some of the cases? I know that because we were in the networking groups together, I know that you work on a lot of divorce cases because I hear all those accolades. Yeah.
So there were three main buckets, right? So the first bucket is those IRS type of valuations. The second is litigation and expert testimony. So a lot of that is divorce work. We have to value the asset of business interest to help split up assets between the parties. There's also shareholder disputes, and sometimes there's insurance-related matters. So if there's a lost profits or business interruption claims around insurance, we'll help with that. Pretty much anything where there's a litigation matter and there's a financial aspect, we can help out. Mm-hmm. And then the last bucket is what I call transaction work. So that's more around mergers and acquisitions, but I do quite a few of annual valuations for buy-sell agreements. Some buy-sell agreements or shareholder agreements call for an annual valuation to know if there's a buy-in or buy-out of a partner, what that valuation is from year to year. There's also just general business planning. If someone is thinking of maybe selling, but they're not sure what their business is worth, we can help them understand that and do some planning around insurance or other aspects. And then there's some financial reporting in transactions. So when there's a merger and acquisition, there's what's called the purchase price allocation that has to get done. It's really more around intangible asset valuations. So we value customer lists and trademarks and patents and all kinds of intangible fun stuff to do. Mm-hmm. So that's really kind of the main reasons for valuation. And as you can tell, they're pretty much sourced from a lot of attorneys. So trust and estate attorneys on the IRS valuations, divorce attorneys on the divorce, litigation matters, corporate attorneys around shareholder disputes, and then also accountants. Yeah. And then centers of influence like you.
There you go. This is great. So let's take a little quick break here, and then we'll come back and we'll talk some more. I'm here with Mark Campbell, Scout Valuations.
Hey there. I just want to tell you a little bit about my new book that just came out called Mastering Your Financial Life Cycles. And here it is. It's how to successfully manage your money in every decade of life. I co-authored this with my CFO, Liz Levy. And together we created this manual that's going to help you through every stage of life. We talk about having a baby. We talk about young adulthood, pre-retirement, what to do when you're at that age of retirement. If you're contemplating divorce, do you need an estate plan? We cover all of these, each subject in a different chapter. And I really think that you're going to find this so helpful because at the end of every chapter, we have checklists that you can look at and you can use, and they can be a guide for you. So this is a wonderful manual that we've created. It's available on Amazon. You can also find it on our website at judithheft.com/book. And we're here for you. If you need anything, reach out. I hope you enjoy the book. Here's another picture of it, just so you know what's going on. Here it is. And I'm really proud of it. It's my second book, and I'd love to have you read it and give me your feedback. Judy Heft, judithheft.com, financial and lifestyle concierge, celebrating 26 years in business. And over the years, I've learned so much. And what I've been trying to do is impart a little bit of this knowledge to you so I can help all of you become as financially organized as I am.
And we're back. We're back here with Mark Campbell, Scout Valuations. So, Mark, I was thinking, so do you ever act as an expert witness?
I do, yeah, quite a bit. So I have mostly divorce work, but I have some other stuff that's going on right now. A couple of the things that I'm working on in the litigation realm. I have a valuation I'm doing for divorce of a private equity fund. Hold on, the light just went off. So I'm doing a valuation for a divorce of a private equity fund, and they're mainly in the oil and gas industry. And so kind of the tricky part of this is that, they just raised a new fund that they're investing, but one of their main investors is a large collegiate endowment, college endowment. And that endowment has said that they are no longer investing in oil and gas. So for ESG purposes, so they're trying to be more sustainable and that type of stuff. So the tricky part is that all these the funds that they raise create income for the owner, and we're not sure how he's going to get income going forward after this fund is invested. He's smart, so he'll probably be able to figure out a new investment strategy, but it's a whole different world, and so it's trying to figure out how to model all this and come up with the value of the asset as well as income going forward. I'm also doing a valuation of a restaurant for a divorce, and they're kind of tricky right now because you have to try and figure out how to deal with the pandemic. Right? So they had almost no cash flow during the pandemic. This one is recovered pretty well, but trying to figure out how to include, like I said, the value of the business is what it's going to do in the future. So how is this pandemic going to play out? Is there going to be anything similar? And so trying to deal with that is tricky.
I guess, yeah, that's interesting. So what is that one? That's a divorce situation. Is that what you said?
Is.
Yeah, that's messy. It's really terrible that all these people lost so much business and, so many, but I guess they're lucky to still be in business. So that's a good
Exactly.
thing.
Yep.
So, yeah, it sounds to me like you have to be kind of a little bit of a therapist with your clients. Like you really have to kind of, you have to guide them in the right direction. And it's emotional getting valuation of your business because I'm sure everybody thinks their business is worth a lot more than it is on paper.
Yeah. Well, it depends on whose side you're on, right? So a lot of times in a divorce, the business spouse thinks their business is worth nothing because it's all them. But I actually have done quite a few valuations of businesses where the owner passed away, for estate plan. I've done them for estate planning purposes. And I know that the owner thought they were probably the only reason it stayed afloat. And I've done 3 or 4 where the businesses are thriving and not, that's because that they've taken the right steps afterwards, brought in professional management and figured out a way to continue it. They struggled, but they've managed a way around it. So I guess no one's irreplaceable. Everyone's important, but there's people out there that can run businesses. So so on one side, some people want low values and some people want high values on the other. So it just depends. I try and take emotion out of it. Actually, the reason I came up with Scout Valuations as a name is that I watched a TED Talk that talked about soldier mindset versus scout mindset, and how a soldier mindset is just following rules, right? They're given orders and they follow them and to the best of their ability. And while a scout is given the job to go out and gather information, interpret it, and then report on that. And that's really what I'm trying to do. I'm trying to gather as much information as I can, interpret it, and report as accurately as I can.
I love that. That is so cool. I love how you got the name, and I love what you're doing. That's excellent, Mark. Really great. And so I guess, how can people find you? You get most of your leads from networking, I would think. We talked a little bit about that. Is there anything else you want to add to that?
Yeah, so you can find me on the web. My firm is Scout Valuations. It's www.scoutvaluations.com. My email address is mcampbell@scoutvaluations.com. I'm out networking with all types of people, but like I said, most of my work is from attorneys and accountants and other people that I network, like you.
Very good. No, this is great. Well, I wanted to ask you, and I forgot before we went into this part, was like, how did you decide to stop being a full-time CPA and get into this type of work? I mean, probably less crazy this time of year. This time of year, you're probably like, yes, I'm glad I'm not a CPA. But,
yes.
Normally, why did you decide to switch?
Well, it's been a long and winding road, but I started at a Big Four accounting firm, and I moved from there. I was recruited away by a investment bank. So I was doing merger and acquisition work for about 7 years. And so I was helping businesses sell. I was helping develop prospectuses and go to market, and I was doing valuations as part of that. And after a while, I really kind of liked the valuation piece. So I got accredited in business valuation, and I was formalizing the valuation reports at the investment bank I was at. And I decided I wanted to do that full time. So I moved away from there to an accounting firm. And then 4.5 years ago, like you did, got the itch to run my own business. So I started Scout Valuations about 4.5 years ago.
That's great. Well, lots of good luck to you. I'm really happy. I'm glad that we met and glad that we had this conversation today. And again, they can find you on LinkedIn, and your email is, do you want to put that out there?
Yeah, mcampbell@scoutvaluations.com.
Terrific. Thank you so much, Mark.
Thank you, Judy.
You've been listening to Mastering Your Financial Life, hosted by Judy Heft. Thank you for your positive reviews, comments, and sharing this show with others. You can read chapters of Judy's books and catch prior episodes of Mastering Your Financial Life at www.judithheft.com.